So good morning, everybody. My name is Danny Fitzgerald. I'm the acting regional director for the San Diego and Imperial Small Business Development Center Network. We're happy to have everybody here today, and in particular, our six panelists. With the Small Business Development Center, of course, we're funded by the U.S. Small Business Administration and the Governor's Office of Business and Economic Development. One of the main things that we do is assist people accessing capital. That's been our mission for over 40 years. This past year, we've helped people access over 200 million in capital and really be able to help them through this particular process. What we've been doing, since June is having a series of different connecting with capital events like this one, where we kind of have kind of specific topic areas that we've talked, where we've had traditional lenders, our mission-driven lenders, and our alternative lenders. For November and December, we're changing it up a little bit and kind of focusing in on being able to have some more in-depth conversations about kind of what the lending landscape looks like today and what it's going to look like going forward. And so we have an excellent group of panelists that I really want to thank for getting on today. We have Ms. Jenelle Chaloux from Chase Bank, from JP Morgan Chase. We have Denise Cuellar from Home Street Bank. We have Miriam Baltys from CDC Small Business Finance. We have Rosalinda Delgado from Accion of Southern California. We have Pete from LendSpark and Andrew from a Marble Bridge Funding Group. And so our panelists today, we're going to be able to talk a bit about different types of funding that's out there and kind of things that are going forward. Of course, at the Small Business Development Center, we're here. We're not a lender. That's not what we do. We're here to assist you. We're here to assist small businesses one-on-one through group through events like this, to really be able to understand capital, how to prepare yourself for a loan, and be able to access all these things. So again, my name is Danny Fitzgerald, and I appreciate everybody for getting on today. And so we're going to start out just with the straightforward. We're going to have you all introduce yourself, your organization, and a little bit of the lending focus for your organization and your products. Why don't we start off with you, Pete?
Good morning. Thanks, SBDC, for having me and everybody here. My name's Pete Deegan. I'm with LendSpark. Simply, we help small and medium-sized businesses get working capital and financing for equipment for their business when maybe they're tapped out at their bank, or maybe have some challenges that doesn't allow them to get funding from their bank, which is obviously our goal, to get you into good standing back with them. So just simplicity, buying a new dump truck for your business, or some equipment for a doctor, or 100 grand, 50 grand for some inventory.
Awesome. What about you, Rosalinda?
Well, Accion is a nonprofit alternative lending organization. We are a community development financial institution. We have been in serving the Southern California region for about over 25 years now. And we provide access to capital to businesses that do not, that are unable to get capital from their traditional bank. And we are also one of the lenders that are going to be participating in the California Rebuilding Fund, which is a COVID relief program that the governor is about to launch. And we're going to be participating in that up to $50,000. And I've been with the organization for 8 years. I'm the business development manager, and looking forward to helping everyone up there that needs help.
Awesome. What about you, Denise?
Good morning. Home Street Bank is a relationship-based community bank. We are a regional bank that is based out of Seattle area, but we've been in the California market for about 5 years and really have done a great job organically growing our relationships here. I'm out in the East County area, but we cover the entire San Diego County market. Our focus is small to mid-sized business, anything that is headquartered on the Pacific Rim Oregon, Washington, California, Hawaii. We are completely full service as far as the large, huge institutions are. We have all the products and services they do. We just do things a little bit different with a very personalized relationship with the client. We can do everything from your $10,000, line of credit for your smaller business to a $10 million commercial loan for your larger business. So we can cater to pretty much anybody.
Awesome. And Andrew. You're on mute, Andrew.
Good morning, everyone. I'm Andrew Krone, Senior VP, Marble Bridge Funding Group. We are a 23-year-old company. We're a commercial finance company, direct lender, and we provide financing for small businesses that do B2B, business to business, or business to government. And we're providing receivable finance, purchase order finance, and contract finance for startups and companies around 50 million a year in revenue.
Awesome. Jenelle.
Hi, I'm Jenelle Chaloux. I'm a business relationship manager at JP Morgan Chase. We are a traditional big bank. Being that we're so big, we're able to do any type of lending as long as your business cash flows. The minimum requirements for loans we do is 10,000. We can go up to 100 million, depending on obviously the size of your company. We do, even though we're so big, we do pride ourselves on having a relationship with our clients, and we include everything. So the personal, the business, everything is combined to give you the best products and to lower the fees and make sure that you're not paying anything for our services.
Awesome. And Miriam.
Hi, I'm Miriam with CDC Small Business Finance. CDC has been around for 40 plus years. We're also a nonprofit alternative lender. So when you're not able to get a loan from someone like Jenelle or Danielle, you could reach out to us, and we're kind of like a second option, and we're a little bit more flexible than traditional lending is. We're a nonprofit, and our mission is really to be able to help people before they're bankable. So, our rates are anywhere between a 5 to a 9.25%. We have terms for 10 years, and our loans don't need to be collateralized. So it's a little bit about what we do. Our loans right now go up to $250,000. And I've been in the industry for 16 years, so I'm aging myself. But yeah, I love what I do. I love helping small business owners. And I think we all know each other really well here. We all network and work with each other and refer back and forth to one another, along with SBDC. And I could say that everybody here on the panel, we all actually care about you. And if someone else on this team is a better fit for you, we'll definitely send you that way.
Well said, Miriam. And that's something I hope, is getting a takeaway from here, even just with the initial question, is that there's a wide array of different types of lending that's out there. And what's important to understand is that is out there, that, one size does not fit all. And that's why there's different organizations, different types of lending products. And that's what we do, of course, do at SBDC, is kind of help you also understand and navigate some of those processes. And, so kind of in getting a little bit more specific on some things is, you touched on a little bit with the types of companies and businesses you worked with, but maybe a little bit more specific in terms of that, along with, kind of the time in business, the size that they have, in terms of what necessarily did, with who you work with. Why don't we start with you on this question, Andrew?
All right, I sort of covered that first round, but maybe a little bit more color to it. So we work with companies that are startups, and we work with companies that are 5, 10, 15, $20 million a year in revenue. The typical profile, the company is growing very fast. It can't secure enough financing from traditional financing, or doesn't want to raise equity. We're working with engineers, contractors, businesses, import, export, food manufacturers, staffing type models, nursing registries, janitorial, any business that provides a product or a service to another business. And like I said, we could work with startups or young companies, credit challenge companies. I mean, pretty much anything that is invoice based is where you'd come to me on, and you're looking to land larger contracts and you're wondering how you're going to cash flow it. And because we can fund up to $5 million a month, we pretty much have the largest box as far as small business goes and the easiest qualifications to get there.
Awesome. What about you, Denise?
We would be looking for at least 1 year's tax returns, depending on the dollar amount. If we're talking about lending, of course, 2 years anything under, I would say 100,000, 1 year's tax return, anything from 100,000 to 200,000, 2 years tax returns, and then above the $200,000 mark, we would be looking for 3 years tax return. But we work very closely with Miriam and CDC and Accion, and to ensure that if you are not ready for us yet, that we move you directly to a relationship with those guys.
Fantastic. What about you, Pete?
Yeah, for us, like I said, we had two products: the equipment financing and working capital. Have similar but slightly different criteria. For time in business, for working capital, you're going to be about 6 months with a 500 credit score minimum. To apply up to 100K, you just need application and 3 months of bank statements. We do go up to $1 million. We'll get some more financials, obviously, for the larger stuff. Similar with equipment, we're going to typically need 2 years time in business. We can do startup financing, although during COVID, it has been a challenge. I'll touch on that later. Credit score for equipment, a little bit more credit-based program. So 600 is going to be our minimum. We do an application only, so just an app and whatever sales quote for the equipment you're purchasing, up to 150,000. So very light on paperwork there. Obviously, like similar working capital, bigger loans, a little bit more paperwork, but real easy up front.
Fantastic. What about you, Miriam?
So we do startup businesses. So I work with your advisors a lot. So a lot of clients that are in the process or have started their business plan or the projections. So they're completely starting their business. Anywhere to, you know, in the process of getting their first year or second year of tax returns. So we'll help anybody in that process that qualifies in the startup phase. And then about the other 50% of our portfolio is existing businesses. So startup or existing. We also do acquisitions. So if anybody is interested in purchasing a new business or a franchise that's already running, we can help with that as well. As far as the use of proceeds, it can be anything from refinancing business debt to working capital, to tenant improvements, inventory. Those are all items that we help with and the types of businesses that we help.
Awesome. What about you, Jenelle?
You know, JP Morgan Chase is a traditional bank, so we do have type of requirements. We do ask that, especially now during the COVID, we're not doing startups. We require 2 years tax returns. We are looking for, you know, top tier credit, unless you have a really good explanation. But we would be the place you come after, obviously working with CDC, some of the other alternative lenders, or if you have an existing business, you have specific needs, use of proceeds. Our wheelhouse, we like equipment, we like anything we can collateralize. We do lines of credit, but again, we'd ask for anything less than 100,000, would ask for 1 year tax returns. Anything over 100,000 would be asking for 2 years tax returns. And we do base everything on the relationship. So we look and see, you know, what you have with us, as well as what you're asking for.
Awesome. And Rosalinda?
So at Accion, we continue to lend to startup businesses as well as growing businesses. We have focused our attention more into the COVID relief program, and basically everyone that has a business has been affected by COVID. The people are having more challenges, or the businesses that are having more challenges are those businesses that started in 2020. That were not in existence last year. So we are doing regular loans as well to businesses, especially those that are in essential industry, or they have pivoted in in a direction that is going to be more profitable for them. So we're definitely dissecting those deals to make sure they make sense. Any deal above 50,000, and particularly talking to them to make sure is something that we can do before they start the process. If they fit the profile of COVID, we will classify them under COVID. Even though our COVID relief program has closed now because we are, the funds were exhausted, we are waiting for 2 more programs that are going to be revealed pretty soon. In terms of industries, we are lending to all the normal industries like business acquisition, equipment, inventory are things that we lend. Working capital, a lot of people are looking to pay debt, right? And trying to survive. So we are taking all those people into consideration. The most important thing is that they have the capacity to make payments on the loan, or they have, a lot of people have gotten an extra job or a part-time job that give them the capacity. We want to look at businesses that are still opening, or they have, for example, gone online. So we can see that sustainability becomes a very important factor for us to approve those loans. We don't know what is going to happen, right? However, we know that there is a vaccine coming and there is a little bit of hope at the end of the tunnel, right? So we'll see what is going to happen further, but so far we'll continue to lend to all businesses, as long as I said, they have the capacity to pay and the business makes sense.
Awesome. So, Rosalinda touched on it, and I know, a lot of, and all of you kind of touched on aspects of it in ways in which, certainly business is changed during COVID-19, but also kind of, how has that also impacted in a way, not just the way in which you're doing business, but, aspects of what are some of these elements of risk and things that you're looking at when you're underwriting or you're evaluating a potential loan package, and how has that really changed, and how is that going to change kind of as we enter 2021? Why don't we start with you, Jenelle?
How COVID-19 has impacted us is Chase has pulled back from startups just because of the risk aspect. So we're not doing startups right now. Obviously, it's something we can relook at once the economy and the environment changes. We do ask for a questionnaire. We want to dig deep into your business. We want to see, if you're still making money. So we're going to ask for financials for year end 2019. We're going to see where you were in March of 2020, and we're going to ask for year to date financials showing where you are now. We're also going to be asking, how you pivoted, what you've done to keep your business going. If you're a retail store, as Rosalinda said, if you've gone online, if you're a restaurant, if you're able to do takeout and you're still able to make a profit and cash flow. So we're looking at any of the changes and how businesses have adapted during COVID to keep people on staff. So when you come to us, we're going to be asking for specific financial backup, and we're going to ask you questions about what you've done to adjust and keep your business going during this time.
Awesome. What about you, Miriam? How I know CDC did a lot of disaster relief and such, but what else are you kind of looking at even with your traditional lending and how that might look going forward?
Yeah, so we have a kind of bunch of different things going on, different programs, but yeah, we did a lot of PPP loans. We did a lot of emergency funding at $150,000 for COVID. We have 2 loan programs right now. One that our external loan officers are offering, like myself, which is a COVID, if COVID has affected your business, it goes up from anywhere from 10 to 50,000. We're looking at 2019 tax returns. We're not really looking at anyone's 2020. And just kind of like Rosalinda said, we're making sure that it makes sense, right? That you're able to be open. We're going to ask a lot of extra questions about how exactly are you following guidelines? What's your plan B, C, if things change again, as far as in, how many people can visit your office? Are you online? Those kind of things. So, so we have right now a loan that goes up to 50,000 at a 5% for a 5-year that I'm offering. And then our internal loan officers are also offering a different loan program, which is at a 1% up to 50,000 as well. And then we have all our regular products before all this happened. Of course, our guidelines are tighter than they were before. So now our minimum credit score requirement is 680 instead of 620. That being said, that loan goes up to 250,000. So with that loan, we're still doing startup, any kind of startup, as long as they're not in the adult industry or marijuana industry. So we're still entertaining all of that as long as it makes sense. And then we're also doing acquisitions, as I mentioned before, in existing businesses with that larger loan program that goes up to 250,000. So, I mean, COVID has affected us, and yes, we had to tighten up some of our guidelines, but at the same time, we recognize that there's a lot of people that are being affected by COVID and are not going to meet those tighter requirements. So we do want to offer financing for them as well, which is what we're doing with our other loan program, where you can only go up to 50,000, as I mentioned, but you're getting like a 1% or a 5% interest rate. And qualifying is even easier on that, and your credit score can be as low as a 640. So we're trying to meet the needs of the people that are out there right now. Some people are actually being very successful because of COVID, and other people are struggling. So we're trying to help both sides.
Fantastic. And Pete, you talked about, I mean, obviously your focus is on a lot of equipment financing, but really how has COVID come into your underwriting, principles?
Yeah. So I guess to touch on the startup thing prior, because everyone wants to know about that. Usually, we did a lot of startup financing for equipment, all different kinds of things. And now it's really tightened up, but we still are kind of meeting you halfway. You have to have a 700 FICO, home ownership is required. We don't collateralize the home. It's just a credit stipulation. And we require a 20% down payment, and it's up to 75K on equipment only. So we do have a startup program, albeit it is, very difficult for, most people to get approved by it. We aren't doing nearly as much volume as we were before. To touch on like the underwriting in general though, we're a lot more story-based. I'm sure everybody is, 2019 tax returns, frankly, don't really tell me anything about your business at this point. It's like it might as well be from 10 years ago. So really it's, I guess, to tell you a story about a loan I'm actually closing hopefully today. It's a gentleman that I was originally trying to get a truck loan for back pre-COVID earlier in the year. And he, ended up not getting the truck loan from us, but comes back to me last week on Friday. Hey, Pete, are you still doing loans? I actually pivoted. I'm still doing trucking, but I started doing like liquidation purchasing, when they buy like trailers, like overstock liquidation, and he sells it to different retailers and whatnot. He actually got into it from delivering some of the loads, and it was a great pivot for him. And he's really only been doing this 2-3 months. Most banks, lenders are like, no, we're not going to give you $100,000. We, got on the phone, got creative. This took a couple of days to really negotiate out, iron it all out. We're really going to take 2 or 3 of his trucks that he has, because he owns them outright, collateralize those, also lend based off his revenue, and we're able to get him 150, just about, hopefully funding today, for him to use for inventory and liquidation purchases. And he completely pivoted his business. But like I said, our 2019 tax returns, when he was doing trucking and had 8 trucks going, crumpled that up, throw it in the garbage, doesn't mean anything to us. Let's get on the phone, let's talk about it. So that's I guess how our underwriting and everything really has changed.
Awesome. Thanks, Pete. And what about you, Rosalinda? I mean, you certainly talked some of that, but more so even with for some of the working capital loans for businesses that are doing okay, what else are some of those criteria that are being looked at a bit differently?
Well, first of all, I wanted to mention that we have been helping our existing clients in getting an additional relief loan. So for the first time in history, we're allowing our clients to have 2 loans. We have also helped our clients with their payment, doing deferments and things like that. Now, in terms of, we have also a lot of old clients coming back to us now because they are suffering, and we are, of course, they had an excellent history with us, and we continue to help them. in terms of brand new client, absolutely. We're looking definitely at what is it that they are doing. What is it that they're doing? How strong they are as borrowers. We're asking for co-borrowers. We're asking for collateral. Anything that we can use to provide strength to the deal. As I say, if I see that the client is not prepared, I'm sending them to SBDC, because here is what I see that is happening. There are some businesses, of course, that are going to fail, and they are failing. And there are other people that say, oh, I want to buy that business. Oh, it's a great deal. But how are you going to make it happen? How are you going to make it work? So, I said, you need to talk to an advisor, and I send them to SBDC before they jump into something like that, considering, sorry about that.
It's a client calling you.
And I don't even know what my phone. So it's buried here somewhere. So considering that things that might look a great deal right now, people want to get rid of those businesses. So why are you going to buy it? So we definitely need an explanation on that and a strong business plan to see if that's going to be something. And of course, a business valuation. Sometimes, oh, this is a great deal. How do you know it's a great deal? Have you looked at the bank statement? So at the financial statement. So we are definitely asking more questions than we used to. And if they started that this year, especially, sometimes we cannot help them, right? Because there are people that started like a week before COVID, and they were not even able to start. They're not doing very well right now, if they're still alive. So definitely collateral is becoming very, very important. Co-borrowers are becoming very, very important, especially for startup loans. Now, essential businesses, we see a lot of businesses having a lot of success. Home improvement, people are remodeling their homes. Those people are super busy. They need capital, they need working capital to be able to work on their projects. Those areas, they're strong. People looking for trucks also. These are fully collateralized food trucks. People wanted to buy food trucks. So we still see a lot of those requests, but of course we are being very, very, very careful and asking many, many questions to see what we can do, and what we say, hold on, you're not ready yet.
Fantastic. What about you, Andrew? I know you and I have had a number of conversations about this, so I know you're looking at things in different ways and yet similar ways.
Yeah, from a point of view of the client base we had with COVID, there were clients that were definitely affected during the shutdown and the quiet periods. PPP idle loans came into play that helped them get over the hump and get them back on track. We see a lot of new startup clients coming in who have, because of COVID, had to do their own thing now. And again, we work with startups, so that's not an issue at all. The underwriting hasn't really changed all that much at all from our end. From that respect, we're bringing in any and all businesses that fit the model, that have receivables and are looking to get better cash flow or growing. The amounts haven't changed. We may look at maybe some of their clients if they're doing business with retail, since retail has been affected by this. If you're doing business with some of the, let's say, higher credit risk major retailers out there. But since we don't fund restaurants and a lot of the businesses that really were impacted by COVID, the B2C model, it really hasn't affected us in any way. If anything, right now, we're back on track, growing quite rapidly. And we expect over the coming months, because as you can hear from the panel, there has been some tightening across the board. We're actually starting to get busier, and we expect to be swamped next year as we get into 2021. So we're a good company to talk to if you have prospects for growth in your business, or you figured out how to work with COVID and turn it around. And some of the other nonprofit lenders here, I will be working with going into next year. Some of them don't know it yet, but I have a couple of calls to make where we're working with some of their clients right now. And we're going to be helping businesses grow and working with some of the partners that are on the call today to help them get even farther along.
Yeah, fantastic. And what about you, Denise? I mean, what have changed up at Home Street Bank in terms of some of the underwriting prospects and even the business model?
Well, I would definitely mirror a lot of what's already been said as far as we are going to want to know how your company has pivoted during COVID. And we will be looking for the same type of financials right before we lock down to currently, how are you doing now? That's definitely I'd say the biggest change for us besides the questionnaire, but we haven't closed off any of our products. We haven't stopped lending as far as what our product options are, which I'm proud of the fact that we at least are staying within our model. But we will ask those additional questions as well. We want to see how stable or how you were able to thrive and pivot and maybe completely change the business model 100%. And I will again mirror what Rosalinda said. If a client comes to me and I can tell that they don't have their ducks in a row, the first thing we do is, give a call to you guys. So it's important for us to have those really close relationships. As far as that goes, the changes in the branch physically, we are keeping our door locked just because we want to ensure that our lobby traffic stays within, what it needs to be. But, honestly, we've got, of course, the plastic and the face masks and things of that nature. But besides that, we're trying to really keep everything as business as usual. And if my clients still want me to go to them, absolutely, I'm coming to you. Whatever my client would like me to do, what they feel comfortable with. If Zoom is what they prefer, well, that's what we're doing. We're doing Zoom. So we're just trying to cater to whatever the individual need is for that for our clientele.
Fantastic. So another thing that changed that we've seen certainly with COVID, and this is just going to be a question to whomever, one or two of you that might want to answer it. But, we're seeing obviously a huge switch in terms of an increase of e-commerce, an increase of online sales, an increase of all these different types of activities. And, and we've obviously seen some different challenges that are, everything from the, home internet and home Wi-Fi's and things like that. But how does your organization look at, cyber safety, cyber security as a risk element, or does it at all? And this could be to anybody if they're kind of looking at it and talking to their clients about that. Anyone want to answer that one? I'll just leave that one open.
I'll answer that.
Sure, Andrew.
All right, so from a startup, just from our own personal side, over the 20 years I've been with Marble Bridge Funding Group, there has been an increase in the attempts of, getting, not to spam, but ransomware and things into our mailboxes, which I think a lot of small businesses have seen. In particular, and this is just worth repeating for everyone here, I had somebody email me and had a potential referral they wanted to give me, but the way it was written was a little bit suspect. So I emailed back the person to say, just want to make sure this is you and make sure it wasn't someone else. And the person responded, yeah, it is me. And yeah, the information I gave you, go ahead and click on it. Well, I didn't do that. I ended up calling the person individually one more time. And it turned out that his email was taken over and somebody was actually responding to the emails going back. So it wasn't even him. And, got very close and I had to talk to our tech people. So when you see suspect stuff, don't even click on it to respond. Just call the person individually would be my recommendation to you from a personal level. But at the side of our side, we've done a lot of different stuff, a lot of different softwares that have come into our company to make sure that things run smoothly and there are no issues. And I'm happy to say for our 20 years, we've never had any issues with takeover of that type of situation. From our clients' end, the only thing I've seen is their emails do get compromised. And so, from working outside and working with our clients, the biggest thing is that you guys make sure you have a really good tech person that can advise you on software and things to protect your systems, because it's really a nightmare when it gets violated.
And Jenelle, I think you had an answer, and I'm sure JP Morgan Chase has some policies on this.
Oh yeah, definitely. I just wanted to say that we really work with our clients, and we have an amazing fraud department, and we're constantly looking at any outgoing wires, any outgoing ACHs where it's suspect. In fact, part of my job is to reach out to clients. I had a client that they sent a $10,000 wire to China. It was the first time there was a question about validity. So we contact and reach out to the clients and make sure that, in fact, it is them sending the wire, that they know the person, that it's a reputable company. So we go through the steps with our clients too, especially if it's something that our fraud department feels suspect. And we also do have a lot of fraud products in place to help our clients as well. We have ACH debit block, where if you have an ACH, you can only people that you've authorized can debit your account. We have a positive pay, where you upload all the checks you write, and if there's a check that comes through that doesn't match any of your checks, we send you a copy. You look at it, you go through and say, yes, I want this to clear or not. And another thing we have is a reverse positive pay, where you can say, I want to see any check over $5,000 before it's cashed. So we do have a lot of fraud filters in place for our clients, as well as, like I said, amazing fraud department that sometimes people get upset, but it's better to err on the side of caution, where we call the client, we make sure that in fact it is them. They know the client is a valid wire, and we want to protect our clients at the beginning. It's so difficult to get money back once it goes out. So we're really proactive on the fraud plans that we have in place.
Anyone else, in terms of how they talk to clients about their, about their cybersecurity, in terms of that? Anyone else want to answer?
I could put just my 2 cents in here. LendSpark has been set up as a lender in all 50 states. So it's not uncommon for me to be dealing with somebody in New York, Alabama, California, Oregon, all in the same day. So we have DocuSign for all of our applications, all of our documents that you sign contracts wise. We've really been set up to be mobile, to get through COVID really without skipping a beat. So we have fraud prevention software for bank statements, all that good stuff. So we've really kind of transitioned through this pretty easily.
Fantastic. Because the cyber safety and the cybersecurity is all the more critical, especially as we have more and more online transactions, even the points of sale. In talking to some of our cybersecurity folks at SBDC, the one that always kind of like, just a simple example that jumped out at me was, all right, let's say I'm selling at a farmer's market, and I'm using, just some type of credit card system on my phone or on my tablet. The big piece of advice was, use your self-service provider, not the little Wi-Fi that you find that's, the coffee shop or the library by you, because one is significantly more secure than the other. I hadn't thought of something as simple as that, but little tips and things like that, ways in which, the cybersecurity and the cyber safety, because again, as you're having the different types of client information and so forth. So, again, we're in an ever-changing world, and I think there's a lot of different things that are coming up. But in terms of that, to kind of switch to, you've all talked a little bit about some potentially optimism for 2021, but really kind of looking even bigger picture, not, with your organization, of course, but also kind of, because I know you all look at, how things are looking at 2021, where Rosalinda's talked about the vaccine and so forth. Well, what do you look at from the lending landscape for 2021? Why don't we start with you, Denise?
Well, we look at continuing as we are for the foreseeable future. We're very lucky that our relationships with our clients are pretty deep, and we've had very, very, very little defaults next to zero actually, and in the very few clients that did need assistance, we were able to go ahead and work something out for them. So we're very optimistic that we will be able to move forward as we are now, not cutting any of our products, continuing to lend like we normally do, but just keeping that relationship very close, keeping a more in-depth relationship with our clients to their benefit, really, right? What can I do to help you? How can I ensure that you're growing or moving on the path that you need to go do? So I don't see much changing for us as far as that goes. I don't see any additional products coming on either, but really we don't need them. We're pretty vast and have the options that we need for our clients. So looking good.
Good. Love the optimism. What about you, Miriam?
Well, I have already started to notice that underwriting is, although on paper, all our guidelines are still very tight compared to, before we worked together for a long time. But I have already noticed that I am able to present, like yesterday, like our minimum credit score requirement is a 680 for our 250 product. And also our SBSS score, which is the score that we get from SBSA or SBA, it has to be 165. So I had a client that I presented yesterday to my manager, and she presented it to the head of credit, which honestly had everything that was perfect except for those two items that in the past, when COVID kind of was in the heat of it, would have been an absolute no, not even a point in deviance. But this client had a one, instead of having a 680, he had a 660. Instead of his SBSS score being a 165, it was a 150. And they gave it an okay, and so I'm seeing that our underwriting head of credit is being more lenient, though I don't think she has the confidence yet for 2021 to just kind of put it on paper. But I think if things continue to proceed as they are, I think that we've realized at CDC that a lot of small business owners are very resilient. And like I said, it has to make sense for them to get approved and funded. But, clients now that are small business owners, I mean, they've had enough time to put like I said, a plan B, C in process. And they're either doing that or they're going back to a different way of doing business. So, and seeing that resilience, I think that our credit is becoming even more and more confident. And I can only imagine in 2021, unless, if something gets extremely worse, that people are going to continue to figure out how to make their business work in, present, our new state and federal regulations that they have on what they can and can't do. So, like I said, not necessarily on paper, but I am seeing with my clients that we're being more lenient. So I can only imagine that will continue to slowly grow in 2021.
Awesome. What about you, Pete?
Yeah, in 2021, I'm really just hopefully looking forward to getting our startup programs kind of back to in the standing or position that we were pre-COVID. Like I said, we did a lot of startup business. It was all different kinds of industries, and specifically getting back to helping those industries that were heavily impacted, specifically restaurants. I can't tell you how many applications I get a week for a food truck or food trailer that, last year would have been no problem. Let's get it working. Docs will be out in a couple of days, and now it's been a challenge to turn those people away or to say, hey, put this on pause for 6 months. Or I know you've waited a long time to do this, but we just can't right now. So hopefully 2021 will, like Rosalinda said, we maybe have some progress in the vaccines or in how this is developing, and that aspect of underwriting will loosen up because it's a big part of the economy and a big part of what we do here at LendSpark.
Fantastic. What about you, Jenelle?
I think, as everyone else said, I'm cautiously optimistic. I think that 2021, we'll see that the people that were resilient, that we're able to pivot, that we'll get back to, doing startups. I'm actually have a restaurant loan right now that's being approved and funded. So even you know, when people think of restaurants not getting done, you know, I had a client pivot. He was able to do takeout. He was able to add, you know, merchant services. He was able to adapt. And because of that, he was able to be successful. So I think that the banks are looking at, you know, that the business owners were able to sustain and grow. And so I think that, you know, that the credit is starting to loosen a little bit, as long as we're able to tell a good story, let them know, you know, what you've done. And I think that you will see a lot more loans, and I do hope to get back to startups as well.
Fantastic. And what about you, Rosalinda?
Well, actually, I agree with Denise. We're very optimistic for next year. I know the first quarter of the year, we're going to be extremely busy as an organization. We have seen a lot of innovation and creativity in our borrowers. It's just amazing on what they have done to save their business and what they have discovered, especially going online, doing e-commerce. We have clients that have triplicated their sales. I mean, this is a yoga studio going online, triplicating their revenue. Amazing things are happening. So I'm very, very optimistic. The political environment is another factor that is going to be, it's going to bring a lot of positivity, especially among the business community. So I see a lot of good things for 2021. I mean, everybody's ready to trash 2020. People can't wait for 2020 to go away. However, it has given us, we have learned so much this year. As lenders, as borrowers, as businesses, we have learned a lot this year that is going to help us survive anything and everything. So all those borrowers that got stuck and did not pivot their business, or were not creating enough to find ways to survive, they're going to go away. But a lot of those business owners that found other avenues of revenue, you know, they're going to thrive. And I think it's going to be creative and innovation. For example, you know, one thing that we saw this year is Black Lives Matter, the movement that really, really got a lot of attention. So a lot of Black-owned businesses improved their sales. We have an actual client that she couldn't keep up. Everybody was ordering her cookies online. She couldn't keep up. She came back for a loan to be able to meet her demand. So not everybody is suffering. There's gonna be everything is shifting. So we can still see amazing stories out there of people that have found a way to thrive in these difficult times. And whatever is to come in 21 is gonna be better. So we must be optimistic.
Yes, I know about that cookie one because I have my 15-year-old's asked me to take her there this afternoon. So, but you know, Friday afternoon cookies, it makes sense. So, Andrew, what about you? What are you looking at for 2021?
All right, so I'll give you a global picture from my neck of the woods. From what I can gather, if the vaccine can get out into the marketplace first or second quarter, we'll probably potentially turn the corner on this thing somewhere around the third or fourth quarter next year. I think that's probably the realistic viewpoint. From the financial community that I work with, and I have thousands of banker contacts in my database, and you know, we have a pretty good snapshot in dealing with them on a daily basis. I think in lending in general, not from my world, but from traditional lenders, is going to remain very tight through 2021. There's going to be a lot of reviewing of clients going on. We're already starting to see it in my backyard, and we're already starting to see people who are, to be honest, they are losing their bank lines of credit right now. And these are people who are not unprofitable, but they are having the loans called because of trend lines. So there's going to be a tightening up continuing, I believe, through the first and second quarter next year. And I've gone through these cycles since I've been here 20 years, nothing quite as extreme as this. And that wave hasn't hit yet. So I think you're going to see a lot of changes within the financial community. To offset that, our federal government is going to be printing trillions of dollars to keep things going. There'll be more bailouts coming for small business, probably helps for restaurants, maybe even forgiveness for people who have student loans. There's going to be a big transition, I think, that's going to be coming down the pike in 2021. And those are the things that are going to be pushing the other way, trying to stimulate the economy and get things going on. So it's sort of like a couple of different trend lines that are happening. But the bigger picture of all this is, by the time we reach the second or really third or fourth quarter next year, I think we will turn the cycle on all this if everything goes right. And going into 2022 is when you're going to see a wave of growth that I think will be pretty amazing. So that's what I think it's going to be.
Fantastic. Appreciate that. And, at SBDC, we're planning out for 2021, we're looking at things from all sorts of different perspectives. Obviously, as everyone's talked about here, there's some industries that have continued to do very well. And I think there's a lot of opportunities there. But, we're still worried about certainly the service sector, the tourism economy, the convention economy that is so prominent here in San Diego, and what that's going to look like. But we're here to help any of those types of businesses as well. So I think as we circle back and start to wrap up, I'm going to kind of come around the horn and ask each of you for a tip and or a success case that you've certainly have a client you've worked with, or a tip for, a takeaway for small business owners in terms of what they can do. Why don't we start with you, Pete?
Yeah, I'd say the same tip every week, but get your online profile all together, because it's one of the first things we do. Make sure your phone numbers, addresses, all that good stuff matches your applications. If you don't like to get surprised when we look up and see, oh, there's another name on the Secretary of State or something like that. Who's this person? And then I guess like real quick success story, just kind of highlights what we really do here at LendSpark. Gentleman needs a very kind of old used crane, and he's purchasing it not from a dealer but from another business, private party sale. Bank hates it. He's had some issues getting approved. So old, it's expensive, private party. Anyway, we got a mid-single digit rate financing, very little money down, hopefully get it closed next week early on it. And that's just a little highlight of what we do, 115K.
Fantastic. And your tip is worth repeating. I saw everybody nod, and so it's 100% correct to keep repeating. What about you, Rosalinda?
Well, I talked about my success story already, but in terms of tips, this is something that I'm seeing as we speak. If you are a borrower, you want to borrow money and fill out an application, make sure your driver's license is not expired. Make sure your business entity is not suspended. Make sure you have a DBA. Make sure you have a seller's permit. Make sure you have proof that you have a business. So this is something that we are seeing, and people don't realize that they need to pay attention to these things. Pay attention to your credit. Make sure you don't have any collections. Monitor that. Make sure that if you got a deferment on your car payment, make sure your bank didn't report it as late or not current, because some banks have promised that it won't show on their credit, but all of a sudden they see it, and then they have to go back to the bank. What happened here? So make sure you monitor all those things, because these are the surprises that we are telling our clients, and it takes a long time now to get a DBA. It takes a long time to renew your license. So all those things are going to delay you to be funded for your business.
Fantastic. What about you, Denise?
I would say my biggest tip would be just be completely forthright and forthcoming with your banker slash loan officer, whoever you're working with. There's nothing worse than painting a certain story to the underwriting team and then having to answer questions about stuff that pops up on the credit report that we didn't know about. If we can put a really good story to whatever may be there, that blemish looks a lot better than us on the tail end going, I don't know, let me go check and see. So just be as honest as you can. Honestly, we want to help you. We want to do as much as we can to get you where you need to be. And if we're not the option, then we'll make sure that you have an option. And there are other options out there, absolutely. But there's no way for us to know that unless we know what we're dealing with from the get-go.
Fantastic. What about you, Andrew?
Okay, so a good success story. Just recently, I was referred in to a client from an SBDC in my neck of the woods. He's a retired police officer. He's been kicking around working for a couple other companies for a couple of years, and he's finally decided to jump in and start his own security company. And I have funded probably 10 to 12 of those over my career. And so I was able to sit down and lay it out for him how we would work with him. And because he's going to have a cash flow issue, having to make payroll weekly and bill once a month. So I explained how that worked with him. And because of my experience, I was able to give him at least an hour, a couple hours free consultation, so to speak, of what he needs to do to really make sure the business succeeds from our angle and from all the different security companies I've worked with over the years, so he doesn't make the same mistakes. And he was really appreciative. It was eye-opening to him to hear it from a lender, something that he has never seen before. So he's going to be signing up within the next week with us. And he won a contract from a competitor that probably has about, it's probably 20, 30 times the size of where he's going to be, but it's a good startup contract at $300,000. And understanding my business, since we have no minimums and we could fund up to $5 million a month, he thinks he could land 3 of those within the first year, which would get him going really quickly right out the door. So that's a good success story. As far as tips for business, and in this type of event, the SBDC, you can't do any better anywhere in California than to work with your local SBDC to get advice. But from that side, you also need partners. So besides your financial partners, the SBDC, you should have a good CPA. You should have a good bookkeeper. I would say a bookkeeper that is certified QuickBooks expert bookkeeper, just not a regular bookkeeper, who really know their stuff. So you make sure you have the right financials, the right numbers. I ran into a business yesterday that was looking to fund with us. And in the conversation, I discovered he hasn't filed any personal tax returns for 3 years. So you don't want to have that happen, because no lender is going to come in unless you get caught up. He hasn't had any revenue per se, but from the personal side, but it is required to file it yearly regardless of it. And so I said, you need to get that going to get there. So you got to make sure all your ducks in a row, all the basics of being a business are done before you really come in to get the lender. From my end, I can live with it and just tell the guy he needs to get it done as one of the prerequisites to bring us in. But you want to have all that ahead of time when you come in and see a lender.
Fantastic. What about you, Jenelle?
I do have a couple of success stories. I have the restaurant I mentioned before. I'm also doing a loan for a gym, which is surprising. I'm doing, with everything going on. But again, the important thing was that each of these clients was able to pivot, was able to, the gym, he was able to, go on site. He was able to, maybe his equipment outside. So I think that is really important, that if you're in a business, you're able to look at the landscape, you're able to pivot, you're able to make adjustments, and you can still get the loans if you're able to show, again, you have the revenue and the cash flow. The main tip that I would say is know what you're looking for. If you want a loan and you come to a banker or a lender, have a specific amount. There's nothing more frustrating than people saying, well, how much do you think I should borrow? Like, I don't know. I mean, I don't know what your business is. I don't know what your projections are going to be for the next year. I don't know if you need equipment. I don't know if you need working capital. So I think before you talk to a lender, sit down and determine what it is you really need and how much you need to sustain your business. It makes the conversation easier. And then, others have said the same thing. Be upfront, honest. If you have a credit issue, let us know why. I want to be able to do a write-up, and I do a write-up to the underwriter. I tell your story. So the more honest you are upfront with everything that's going on with you and your business, the better story I can tell. For example, if I'm doing a request for someone that's been in business for 2 years, it's a different story if yeah, he did it for, she did it for 15 years previously, has like a sole proprietorship, so as long as you give us as much information, we want to make sure that we're able to show that you have the experience, you have the revenue, there is a good story, and it changes the whole landscape of the loan application. So those would be, my advice is yeah, just, really work with your lender and let them know everything, what you want, where you're going, where you've come from, and help us get you the loan.
Fantastic. And we'll wrap up with you, Miriam.
Yeah, I think that I can echo what Jenelle was saying, and I think Andrew and a few other people. As far as in tips, I would say 100% be honest. So, we run so many reports besides your credit report. I mean, honestly, I'm going to know what happened 10, 15, even in some cases, 20 years ago. We're going to know about that DUI. We're going to know about this judgment that you had for $400 20 years ago. I mean, not that you need to disclose all of that part, but if there's something about your credit or you had a bankruptcy, I mean, something that you need to disclose, or you have collections, disclose it up front, because as you can see, we're all well connected with each other. We all know each other really well. SBDC does a really great job of helping, if you're a startup or you're an existing business, they're well connected with us. I mean, they could do a lot of the work for you as far as even knowing who to introduce you to or who to apply with as far as in a lender. So, just know that we're really actually blessed to be here in San Diego. Not all the markets, LA and a lot of other markets are very competitive. They don't play well they're not good at working together, at networking. They're just, but honestly, I can proudly say that I love living in San Diego. I love our network here. I mean, we genuinely care about small business owners. And so, for me, and I think I could speak the same for Rosalinda, Denise, I mean, it's not like your client has to fit in our box or with our, institution. If you don't fit, hey, let me introduce you to SBDC, or let me introduce you to Jenelle or Denise or, Rosalinda. I mean, we all work together. So you don't have to fit our box, but be honest. You don't want your credit run everywhere. That's only going to hurt you. And we'll help place you in the right place. The other thing that Jenelle mentioned, which happens a lot, unfortunately, and when this happens, I most definitely send you to SBDC. But when I ask you, what is your credit score and how much money do you need? And you say, what is your max? And I say 250. That's how much I want. Really? What do you need it for? Well, it's like, no, you need to do a little bit more thinking. Let me introduce you to Esther, or let me introduce you to Joel at SBDC. Like, you need to sit down and figure out how much money you need. What do you need it for? And it's okay if you just need it for COVID to keep your lights open, but you need to be able to articulate this to a lender. And you need to be able to just be honest with the lender. And that's going to give you your best bet for an approval and for funding, which is your goal and everyone's goal here. Is to help your business not only survive, but thrive and continue to grow, even during COVID. So I would say those are my two, bits and pieces of advice. A success story that I have, which I hope, all of you small business owners are doing, or probably already have done at this point. But, I have a client who just was asking for $20,000. She had a pottery business, and people would come, to her place and learn how to do pottery, right? And she had classes, and And, you know, she had to adjust because of COVID, but she was really quick about adjusting. You know, she was, okay, now we're offering everything via Zoom. Now we're giving our classes via Zoom. And she had all these fun ideas. And then she started saying, come pick up your kits. Let me deliver your kits. I mean, and I guess my point is that with COVID and not knowing when this vaccine is going to come out and what's going to happen in 2021, it's like, you know, like I said for the third time, have your plan A, B, C. I mean, you know, what's going to happen if we're in a purple zone? What's going to happen if we're, you know, more free to work, you know, pre-COVID times? It's like, you need to have a plan at this time and point. You know, enough time has passed by that hopefully you do have several, you know, ways of making your business, you know, work, because we don't know when that vaccine is going to come out. And those are the businesses that are going to thrive and strive and that are going to overcome, you know, kind of like what Rosalinda said, no matter what hits you, you know, what's here and what's coming, you want to be able to just have different ways to make your business work so that you can continue to, you know, keep your business going.
Fantastic. Again, thank you to everybody. Thank you to Miriam, Pete, Jenelle, Rosalinda, Andrew, and Denise. Really appreciate you getting on today. Again, we're the Small Business Development Center. We're here to be able to help you. We also want to thank the sponsors of our Connecting with Capital. We have a couple of them on here. Well, you know, Home Street Bank, Main Street Launch, CDC Small Business Finance, Marble Bridge, and Primary Funding. So again, thanks to everybody. Have a fantastic, you know, rest of your day, and have a fantastic upcoming Thanksgiving holiday. Take care.
Thank
Thank you.
Thank you guys. Take care.